Level-to-level trading is the cleanest, most mechanical way to trade the market. And that's what makes it ruthlessly effective. It takes the chaos of trading and compresses it into a simple yes or no decision. It strips away all the middle ground and uncertainty that ruins P&L. That's why it's the only way I trade, and it's the way I'll keep trading for life. So in this video, I'm showing you how level-to-level trading works, and the exact method I use to make my account go parabolic. Let's begin. Now, pretty much every trading strategy you can think of, no matter what it is, will follow this same basic structure. You identify a setup. You wait for that setup to appear. You enter. You manage the trade. You exit. The difference is just what setup you're looking for and how you execute it. So every strategy out there is based on interpreting what you currently see on your chart. That might be based on indicators, price action patterns, trend lines, support and resistance, and other concepts. But the problem with this way, which is the traditional way of trading, is that it requires you to sit there, watch it unfold in real time, and make decisions on the fly. You're constantly analyzing and constantly looking at where to enter a trade. It keeps your brain in an open loop. It doesn't really get a chance to rest. It's almost entirely performance-based. If you're not in the right mood, your day might end up completely differently than if you were in the right mood. You could turn a regular winning day into a devastating blow-up day. So it's something that might work, but it's highly unstable. It feels like walking on a tightrope that never ends. You might last a while, especially if you're talented, but at some point, you're going to fall off. But level-to-level trading is different. It's not based on what's currently happening with the price or how it looks. Actually, it doesn't take that into consideration at all. It's purely based on capturing clean level-to-level moves. So, regardless of what the candlesticks currently look like, or what patterns they're making, we're not paying attention to it. We're just mapping out a few key levels and deciding whether the price moves to the level above or below first. Now, I go more into detail on exactly how to find and mark these levels in another video, which I'll link here. But the basic idea is that we're looking for supply and demand levels. So when price approaches one of these levels, one of two things happens. Either the orders get filled and price reverses, or the orders get absorbed and price breaks through. You just wait for the price to reach a level. Then you check if the setup aligns. If it does, you enter and target the next one. Now here's exactly how that process works, step by step. Take a look at this 15-minute chart. This is just a blank chart with candlesticks and nothing else. So if I were to ask you what you would do here, what would you say? Would you go long, go short, or do nothing? Well, you'd probably say, give me some time to analyze. And you'd stare at the chart, try to look for some kind of pattern, maybe add some trend lines or some boxes or some kind of other analysis. But the problem here is that you don't really know where to enter or where to target. If you want to go short here, for example, you wouldn't really know where to enter, and whether you should exit at a low, or right before the low, or at the next low, or something else. Then you'll have to watch the trade the whole time you're in it. And even if it does manage to hit your target, it'll be a completely different scenario next time, and you'll have to start from scratch. That's the tightrope problem. You basically need to pull a rabbit out of your hat over and over. That's dealing with the randomness of the market the traditional way, and that's what makes trading so difficult. But now let's look at this same chart and add supply and demand levels to it. So when we're trading level to level, what we do is determine a direction, then enter when the price is at a level, and exit at the target level. That's it. And it's much simpler when you look at it this way, isn't it? All we need to do is decide if the price is more likely to move to the level above or below first. We already have our entry and exit levels predetermined. All we need is the correct bias. And the best part is that it's the same thing for every single trade. It's not like we need to try to interpret different looking candlesticks or chart patterns or anything like that. No matter how the market looks or feels in the future, it's always just going to be about whether the price is moving to the level above or below first. The rest is irrelevant. So this makes it an easily repeatable process. And we just need to win half the time with some decent risk management to be profitable. This is much less like walking on a tightrope and more like flipping a coin over and over, but the odds are in your favor. So in this case, if we want to get direction right, we need to know where the market is more likely to move. And that's just a simple process of elimination. We only have two possibilities and we need to eliminate one. We can use momentum and trend to determine which one is more likely to work. And this is where I use the cloud. The cloud will tell me the overall trend direction so that I know where the momentum is, and which level we'll probably move to next. In this case, the cloud is starting to trend up, so we can expect it to move to the level above first. From here, we simply enter with our stop and target in the right place, and let the trade pan out. Then our target gets hit, and that's one successful trade. And even when we're at this level, it means the market will move to the next level above or below. So based on the cloud here, we can make the decision to go long and take a level-to-level trade. And from here, our target will hit the next level, where we can expect another level-to-level move. And at this point, the market got overstretched from the cloud, so we pulled back to the level below. So when you look at it this way, the market just moves from one level to the other, over and over again, in the constant search for liquidity. And the only thing you need to do is find one of these level-to-level moves a day that's high probability and take that trade. That's it. You don't need to constantly be on your screen interpreting the market or monitoring your trades. Let me show you how simple this is from start to finish. First, you want to assess the cloud on all time frames from the 1 hour to the 5-minute. And if we quickly assess the cloud on each of these time frames, we see that the cloud is very clearly bearish. The cloud is sloping down, and price is in a downtrend. So our bias is bearish, and we're looking for a level-to-level move lower. We don't need to think or analyze anything else. We just need to trade with our bias. So we set our alert at this level, and wait for the price to enter. And we don't need to watch our screen before the alert actually hits. Then once the price hits it, that's our trigger to enter this level-to-level trade and write it down to the next demand. So we enter short, place our stop above market structure, and target the next level. Once we've entered, we don't need to be watching it or managing it. We know that it'll either hit our target or hit our stop, in which case, we'll simply reassess for our next level-to-level move depending on our bias and how the cloud is positioned at that point. So watching it will do nothing. Actually, it's a net negative since it means we're more likely to micromanage our trade or exit early and ruin it. Once we've set our stop and target, our job is pretty much done for the day. We just let it run. And here it does move to our target. That's all it takes for one successful trade, just setting alerts and a few minutes of screen time. And if we continue looking at price action as the market keeps moving, we notice that we keep getting clean level-to-level moves that we can easily trade. And each of these is just setting alerts, a few minutes of screen time, and decent execution. Not bad at all compared to a traditional trading strategy, right? Think about what traditional trading looks like. You're at your screen for hours. You're doubting yourself. You're managing trades in real time. You're constantly making decisions. And at the end of the day, you're exhausted. Even if you made money, you're drained. And if you didn't, you're questioning everything. Level-to-level trading removes all of that. You're not at your screen unless the price is at a level. You're not making constant decisions. You're not managing trades. You set it and let it run. That's why this is the only strategy I use. Because it works. And it works without ruining you in the process. It's mechanical, it's repeatable, and it's scalable. And it doesn't require you to be glued to a screen hoping something happens. Now, if you want help mastering this method, then join the Accelerator program. You'll get access to a custom indicator with these exact levels mapped out, as well as private one-on-one support from me and a private community. If you're interested, the link is below. And if this video changed the way you think about trading, drop a like, hit subscribe, and I'll see you in the next one.